today we're squarely focused on BURU Inc., ticker BURU. Now, for a while, this was just, another name in the specialized tech sector. But the sources you shared lay out this really aggressive bull case. It suggests the company is making a very deliberate, very fast shift.
A huge shift away from just being a niche laser manufacturer.
It's becoming a fully diversified defense and security powerhouse.
And we have to jump right in because the market just reacted. The analysis report points to an immediate trigger. A sudden spike of over 25% in just one session,
Right.
pushing the stock to close at 20 cents. And crucially, this wasn't on light trading. It was on a huge jump in volume.
Okay, so that volume suggests something real is happening.
It suggests the bigger players, institutional money maybe, are starting to believe something has fundamentally changed.
And that's the whole story, isn't it? The narrative pivot. For so long, the market just saw this stock as, well, the analysis calls it a penny stock laser company.
Right, a speculative play at best.
But the source material is arguing that management is trying to completely rewrite that. They want to be seen as a legitimate defense and security hub.
And it all comes down to the valuation multiple. It really does.
Explain that.
Well, you just can't value a company that sells, specialized components the same way you value a diversified defense contractor. It's apples and oranges.
Because defense has more stability.
Exactly. You get recurring government contracts, higher barriers to entry, all the stability that comes with national security. And the analysis says that gap in valuation is the whole opportunity here.
Okay, let's unpack this transformation, because it's not just talk. It's built around some very specific, high-stakes corporate moves. So we need to figure out what strategy they're using to jump that valuation gap and why the analysis is laser-focused on January 2026 as the big catalyst month.
The central claim here, the bull case, it all revolves around a roll-up strategy.
A roll-up? For anyone listening who might not follow M&A daily, what does that mean?
It's not just one merger. A roll-up is a calculated series of smaller targeted acquisitions. You do them in rapid succession to build a much larger company fast.
And the goal is to grow geometrically.
Right. You aggregate revenues, you cut costs, and most importantly in this case, you immediately command a higher valuation for the whole thing than just the sum of its parts.
And the timeline for this one is, well, it's breakneck. The analysis points to the company's recent year-end update, which is targeting January to close deals on 3 key European firms.
The big 3 January mergers, that's what the market, with that volume surge, seems to be starting to price in.
So let's look at the targets, because this is where the strategy gets really clear.
It is. And they are not acquiring more laser companies, which is the key. The first one, the analysis calls it the heavy hitter, is Techne SPA.
An Italian firm. And their specialty is what makes this so transformative, right?
It's electronic warfare systems and special mission vehicles.
That's a total game changer. You're going from the lab bench straight to the battlefield.
Pretty much. Electronic warfare is one of the highest growth areas in modern defense. We're talking about jamming enemy comms, protecting your own signals.
And this is less about traditional hardware and more about controlling the electromagnetic spectrum.
Exactly. Buying Techne instantly gives BURU a real, proven capability in heavy defense. This isn't just selling a component. This is system integration, vehicles, and, established relationships with European defense ministries.
So it immediately validates their claim to be a defense contractor.
It provides the tangible, high-value assets to back it up.
But it's not just hardware. The strategy seems smarter than that. The second target is labeled the software play.
Right, Orbit SRL. It's a software as a service, or a SaaS company.
And their focus is operational resilience. What is that exactly?
It's a pretty sophisticated move. So while Techne gives them the hardware backbone, Orbit brings in a modern revenue stream. Think about it. Defense today is all about networks and data.
Okay.
Operational resilience is the ability of those systems, your command structure, your communications, to keep working under extreme stress, like a cyber attack or heavy jamming.
And the business angle here is just fantastic. A SaaS company means high margin, sticky revenue.
Yes. Defense contracts are not just big one-off payments anymore. They have recurring software fees, maintenance, licensing. It smooths out the revenue, and investors love that predictable income.
Which helps justify a higher valuation.
It absolutely does. Then there's the final piece of the puzzle, Lyocon.
This one is a laser specialist, though.
It is, but the analysis specifies it's for defense applications. This looks like a vertical integration play. They're refining what they already do best, their laser tech, but for dedicated defense products.
So things like directed energy weapons or counter-drone systems.
That's very likely the target. So you connect the dots. And here's the big takeaway. If, and it's a huge if, these 3 deals close in January.
And cross-border M&A is always tricky.
Very. But if they close, the analysis claims BURU instantly transforms. They go from being valued like a distressed tech stock to a diversified defense holding company with real assets.
Assets spanning vehicles, software, and advanced tech.
And that, the analysis argues, is what bridges that valuation gap almost overnight.
I get the theory, but M&A is so risky, especially with military tech involved. The report has to address the risk.
And it does. It doesn't shy away from it. I mean, just look at the volatility. The 52-week range tells you everything you need to know.
The high was near 85 cents, but it recently hit a low of 12 cents. That's a huge drop.
It's a highly distressed stock attempting a very, very high wire act. The price was beaten down from those highs, and the question now is whether this jump to 20 cents is the real bottom.
So has the selling pressure finally ended?
The technicals in the report seem to suggest it has. They point to a classic pattern, a double bottom, that formed around that 12 to 15 cent range in December.
And a double bottom, for those listening, means the stock tested that low price twice, failed to go lower, and then reversed.
It's a textbook signal that the sellers are exhausted. Consolidation is happening.
So you have that technical support plus this new transformation narrative, and that's what fueled the recent breakout.
That seems to be the argument. The move to 20 cents wasn't just random noise. It broke a key resistance level that was holding the stock down.
So the technicians are saying the momentum has flipped from bearish to bullish.
It has. And if that holds, the analysis points to a pretty massive upside target because of what they call a price gap.
What exactly is that gap?
Well, if you look at the chart, there's a big historical trading range between 30 and 35 cents, where the stock was back in October before it fell off a cliff. So now there's this vacuum of trading activity between its current price and that 30-cent level. In technical analysis, the price often moves quickly to fill those gaps.
So the 30 to 35 cent level is the immediate target.
It's like a magnet if the bullish story continues.
And what triggers that move? Is it a slow climb, or are they expecting some kind of market shock?
The report is leaning heavily on a shock, specifically a short squeeze.
So you have people betting against the stock.
Exactly. If short sellers are positioned against BURU, betting on it to fail, then an official confirmation of the Techni or Orbit deal would be, well, disastrous for them.
They'd have to buy back the stock to cover their positions.
And they'd have to do it fast. That buying pressure dramatically accelerates the price upward. It's the classic result when a turnaround story starts to become reality.
So, based on the source material, the game plan for anyone watching this is pretty simple. Watch the news and watch the price.
That's it.
What are the absolute crucial indicators that the analysis says to track this January?
The plan is all about confirmed execution. You're looking for a specific press release. The report says to watch for a headline like, BURU closes acquisition of one of the targets.
Or a joint venture announcement. The name Maddox Defense was mentioned.
Right. Any tangible evidence that the transformation is actually happening, the market will react instantly to that.
And what's a technical line in the sand? We talked about the breakout, but what price tells us the bullish momentum is still on?
The analysis gives a very clear level. The trend is considered bullish as long as the price holds above 17 cents.
So 17 cents is the new critical support.
Exactly. If it drops below that, the recent breakout is invalidated, and it suggests the momentum has failed, at least for the short term.
So what does this all mean? How do we wrap this up for the listener?
It means the entire valuation argument has changed. The analysis claims this transformation story is already what's moving the stock from distress to high potential. But the really big run, the move to fill that 35-cent gap, that all hinges on them actually closing these deals in January.
The strategy is there, but now the market is just waiting for delivery.
It's all about execution now.
This has been a really fascinating deep dive. We've covered the aggressive roll-up strategy, the specific assets they're trying to buy, electronic warfare vehicles from Techne, high-margin software from Orbit, and we've reviewed the market mechanics, the double bottom signal, the breakout, and that crucial 17-cent support level.
And before we go, here's a final provocative thought for you to consider as you watch this unfold. The analysis focuses so much on the potential market cap, right? The idea that a diversified defense company is just worth more.
Yeah, that's the core thesis.
So it raises an important question. When you're looking at any volatile corporate shift like this one, how much weight should you put on announced intent, the strategy, the press releases, versus confirmed execution, the actual legal closing of these huge international deals?
That's a great question. It's the difference between a beautiful blueprint and a finished building. Something to mull over as you watch those January news releases. Thank you for joining us on the Deep Dive. Continue exploring the dynamic world of corporate M&A, especially in these volatile sectors. We'll see you next time.